Welcome back to my morning report on Friday, the 3rd of July with me, Rich Perry, market analyst at Anzac Markets. Moving on to dollar yen now, and well, we had this rally that started to come through, and to be honest, it's hit a bit of a brick wall really, because you've now formed a bit of what you could argue to be a shooting star, but I mean, the impact of it is probably fairly reduced because it's not really reversing any real trend, just a couple of days of bounce really, so it's just a negative candle within this range really that we've still got playing out, I think. And the momentum indicators, they're all still sort of fairly benign, not really suggesting any real direction either way. So takes us to the intraday chart, which I find very interesting on dollar yen at the moment, because just sort of zooming out really, the amount of times that the Fibonacci levels and the old support and resistance levels on this chart are playing a role are incredible. We had that rally yesterday that basically hit that old resistance around 123.70, which was a bit of a pivot level, sort of capping highs there, lows there, highs again, bit of a support, and then bang, and it hit almost to the pip. So that's the 123.70 area is that resistance, and now we're back once again in the realms of playing around with the 38.2% fib level. Incredible, consistently used as a pivot level in this chart. And again today, if I zoom in here, we're still finding resistance underneath that 38.2% fib level. So that is the level that you need to be watching. Again, trading underneath it, you could argue it's starts slightly into more of a corrective outlook, possibly back towards the range lows again, or even or just the 50% fib level at 122.35 area, which again has been fairly decent in its use of being a pivot level. But the intraday chart looks fairly fairly neutral, and that is not to be unexpected, considering the 38.2% basic level is basically bang in the middle of this trading range over the past few weeks really. So that is interesting as well. So you're just playing around with this, and I think you should use it as a gauge. So if you're trading above it, it's more of a positive outlook. Trading below it, you're more negative. So it certainly looks, with these momentum indicators basically being neutralized, that you've got a fairly neutral outlook. But just trading slightly below that fib level, I would take it as a slightly corrective move still in place, considering that huge bearish key 1 hour reversal, or bearish engulfing pattern that we saw yesterday after the payrolls data is still has a legacy in this chart. So that seems to be playing out still. So I wish you good luck in your trading on dollar yen, and I'll speak to you later. Thank you.